And another big headline we're keeping an eye on today, Willie, the U.S. reached a significant trade deal with China over the weekend, just in the past several hours. How does Team Trump get this deal to hold beyond the 90 days that was agreed upon?
Yeah, there was a lot of news over the weekend, and we know that those meetings concluded. That two-day meeting in Geneva, Switzerland, with the president's delegation, Secretary of Treasury Scott Bessent, and Jamieson Greer, the U.S. trade representative, meeting with Chinese officials, coming to this essentially an agreement to continue discussions. It's a 90-day deal. The White House is calling this a trade deal, but it's important to point out that they still have to work out some of the details of this. For now, at least, those tariff rates are coming down. The U.S. tariff rate going down from 145% to 30%. The Chinese tariff rate going on U.S. goods imported to China going from 125 to 10%. The U.S. says that 10% baseline tariff is still in play. That 20% fentanyl tariff is still in place. So that's how you get the 30%. But still, nonetheless, they still have to work out these deals. The U.S. delegation, and in this joint statement, I should say, that the Chinese are going to bring down some of those non-monetary trade barriers to that essentially restrict U.S. goods going into China. But there are a lot of details that have to be worked out here to come to a final agreement. But this at least sets the stage and the groundwork for those conversations to continue. And President Trump has noted that, of course, he wants a deal. But it's anyone's guess as to what could potentially happen if this deal falls apart. We could see those rates go back up, though, Liz.
Willie James Inman, always great to start off the week with you, sir. All right, let's take a live look at the big board because markets are very happy about this proposed deal with U.S. and China. The markets are surging today with that temporary trade agreement. Treasury Secretary Scott Bessent and U.S. Trade Representative Jamieson Greer made the announcement from Switzerland after a weekend of marathon negotiations. CBS News foreign correspondent Coren is following reaction out of China to these tariff rollbacks.
Well, there's a great deal of optimism following the joint announcement between the US and China after weekend talks in Geneva, but it is important we put this into perspective. This is a reprieve and not a trade deal. This 90-day pause on the prohibitive tariffs that brought trade between the US and China to a halt and seriously disrupted global supply chains will see the US dropping its 145% tariffs on China to 30%, while China will reduce its retaliatory tariffs of 125% to 10%. Well, China has also agreed to remove some US companies from its blacklist, but not all, and questions remain on China's ban of rare earths to the United States. Well, the markets have rallied. I've spoken to some economists who say the damage from the trade war chaos over the past few months is going to be felt, especially for US companies and US consumers. Those cancellations of US orders are already in the system, which means in the next few months, despite this pause, there will be a shortage of goods on US shelves. Some also see this as President Trump caving in, that he didn't have the stomach for the pain to correct international trade imbalances, which he believes disadvantage the United States. Well, China has been preparing for this moment since the first Trump administration, and this recent episode reaffirms China's push for self-reliance and self-sufficiency. Well, as you can imagine, Chinese suppliers are very relieved. I spoke to one businessman, a candy manufacturer. The US is his biggest export market, and he said this is good news. Everything can start running again. I also spoke to a businesswoman that we did a story on a few months ago who makes insulated water bottles, and she said, quote, "This is such great news. Today is truly a day worth celebrating. My American clients informed me that production and shipping can proceed. I will open a bottle of champagne tonight." While the champagne corks may be popping, the effects of the last 6 weeks since Liberation Day are going to be felt for some time to come. In the midst of all this, a real trade deal needs to be negotiated. Back to you.
Anna, thank you so much. All right, let's bring in Javier David. He's a business contributor for CBS News and the business editor at Dallas Morning News. Javier, great to see you. How impactful is this temporary agreement to the economy of both countries?
Yeah, look, this was a bad news story for everyone involved, the U.S. and China, which incidentally had stopped issuing key data that was tracked by the markets. And also people have this tendency to believe, because we're always watching the markets and Wall Street's doing that this was a big business story or an investor story. Investors are certainly cheering the results, but like this is being felt at the smallest levels of business, particularly retailers. The Dallas Morning News, we've been doing a lot of reporting about this and a lot of coverage, and a lot of mainstream businesses that are exposed to China in ways that they're not able to absorb or manage the way an Amazon or a Walmart or an Apple can. So a lot of them were pleading for the administration to reserve a sort of reverse course, because this was a real peril for the holiday retail season. So overall, this is a good short-term news story for supply chains. There were these real fears of shortages and empty shelves, and these anecdotes over the last few weeks that have been accumulating about ships either sitting idle in U.S. ports or empty cargo vessels leaving mainland China. That would have left a lot of sort of bare shelves and put upward pressure on prices that people stockpiled. So again, in the short term, good news, but as it's been indicated, this is a reprieve and not a resolution.
Right. And I'm curious, is this potential agreement here, this 90-day sort of agreement, is this going to have any impact on interest rates, do you think?
Well, this is, I've said it 1,000 times, I'll say it again. Ignore stocks. Watch what's happening in the bond market and bond yields. Wall Street hated these tariffs from day one. What we're seeing today is a relief rally of the highest order. It's clear that's what's happening. But bonds are telling you a different story. And it's considerably more skeptical than the narrative that's being embraced by the stock market and Wall Street investors. And one analyst I follow noted in his morning newsletter, he said the bond market isn't cooperating with Trump or the Fed. Long-term yields are still relatively high, higher than they were before Liberation Day. So that tells you something. It tells you that interest rates are still pricing in more risk. This is a real problem for the Fed, and it's a real problem for the president, because those rates trickle down to all sorts of consumer-facing goods and services, mainly borrowing costs like credit cards, auto loans, mortgage and refinancing rates, which are still kind of hovering uncomfortably close to 7%.
Yeah, it's interesting you bring up auto loans, because I'm curious how a potential agreement with China could impact other agreements, say with Canada, another big trading partner with us.
Well, what ends up happening is Canada had some very interesting data that they released last week, in that while imports to the United States had basically come to a crashing halt, they compensated for it elsewhere. They basically were just selling their goods to other countries. So that's some of what we saw in China as well. Some of their stuff that would normally come here to the United States, they basically just compensated, at least in part, just by selling to other countries or companies. So that's the whole risk of this. We need clarity, and the market needs clarity, and investors and businesses need clarity. If you have your trading partners kind of offsetting what they would sell to you by selling to someone else, it's not a good story, and it certainly doesn't accomplish the goal that the administration wants, which is to turn the U.S. into this mercantilistic powerhouse for manufacturing. You're not going to get there this way.
All right, Javier David, thank you so much for that insight.